Hello everyone, welcome back to the channel, Matt with Green Bar Trading, and welcome back to another weekly watch list video where we're going to go over everything you need to know for the week ahead in the stock market. Up on the screen where we always start are your earnings for this coming week. Last week, we saw all the big technology stocks and their earnings. So we saw Meta, Microsoft, we had Google, AMD, Apple, Amazon. They all had their results. And we saw some pretty sick moves on a couple of those. While, some didn't guide as good, but others did guide very well and got handsomely rewarded with their stocks just going up like a rocket ship and also bringing the rest of the market and the tech stocks up with it. All right. So anyway, those are your earnings up there. You could take a look. There's still a lot of earnings reports this week, a lot of interesting ones, but that's up to you guys if you want to trade these or not. If you are trading them and you're taking options, like I tell you all the time, if you don't get that big move, you're going to get crushed. That IV crush will kill you. So, make sure that you're aware before you trade the risks of trading around earnings season. So that's your earnings right there. Now, going over to the economic calendar, this coming week is pretty slow. There's not much economic data, but there are a lot of Fed speakers. All right. So you're going to see a ton of Fed speak here, and pretty much that's going to be about it. As far as the interest for me, the economic calendar is pretty slow. Now, going back to last week, it was anything but slow. So we saw on Friday this absolutely insane jobs report. 353,000 jobs. 353,000 jobs. That is a lot. We were expecting 185,000, and it was just a huge beat. Now, the unemployment rate ticked down. 3.7% didn't tick down. It was the same thing the previous month, but the expectations here were 3.8. So that's also a good number, right? Less unemployed. So that's good for the economy. What is starting to get a little scary, and something that I watch, is this U.S. hourly wages. And that was a miss here, going actually up 0.6%. We were expecting 0.3%. So hourly wages going up, right? So people are working a little bit less during the week. They're making more per hour, meaning that companies have to keep prices high. So this can be a potential for inflation to stay, and that goal of getting it back down to the 2% might be tough if this is sticky like this. If this is going up, more money out, right? People have to keep their prices up or even raise prices, whether you're in the service industry, whether you need to raise your prices for food, restaurants, anybody that's working at these places. If they're making more money, it's got to be coming from somewhere, right? So these businesses will have to keep prices high. I don't know if you guys have noticed, but if you go out to eat, it's very expensive. If you go on vacation, if you're staying in hotels, if you're doing anything entertainment related, that services sector is still incredibly expensive. Now, people are still paying. They may be using credit cards, and that's not good either. But that is a sign here that we need to keep an eye on. All right? The whole point of this was to get inflation down. If this jobs reports still come in so strong, it's good for the economy, but what it can do is it could keep inflation higher. And in turn, the Fed will have to keep rates higher. All right, so that's what has happened. That's what happened last week. Wanted to go over that with you guys so you understand what these jobs numbers mean and what they could mean for the Fed and interest rates. All right. So that's what we saw there last week. Again, this week, not interested very much in the economic calendar. A lot of Fed talk, but that's about it. So that's your economic calendar right there. All right, now going over to the charts, starting with the SPY as always. So where are we? Well, we're at all-time highs. The stock market is at all-time highs. It loved that jobs number on Friday, as you can see here, just breaking out on very nice volume. Everything with the market is looking very good, right? So if you go back here and we're looking back at the past 3 years of trading, you can see here that we broke out from this spot. All right. So that's just the previous high sort of consolidated back here at the end of 2021, beginning of 2022, before we saw the market pull back. Well, the market has retraced and gone up, and that was that level that we saw. Consolidation at the end of 2023, and then another clean break. Okay, so the market has been acting very good, right? So you like to see consolidation and then a breakout. Consolidation for a little bit and then a breakout. It's still overbought, right? The RSI is still showing overbought signals, just about anyway. They consider overbought with the RSI at 70. We're currently at 68.54. So not quite overbought, but definitely, inching closer to that. All right. So now one thing that I would look at, if I'm looking at the SPY here, is these consolidation areas to be tested again, which we haven't seen. We haven't seen this tested. So if we look back here, this is a little clearer. All right, so you had this section right here of the SPY. When the SPY first started pulling back, this is the S&P 500 ETF. When it pulled back here in the summer, right? And then we saw that really nice rally in November, December, and now it's continuing in January. When we pulled back, the first area of that resistance was where we topped out here. You see this consolidation right here? That's where we came back to. And a lot of times you'll hit that previous resistance and you'll consolidate around there before a nice breakout. Now, this nice breakout happened on increasing volume. So that's a good sign. And then the market consolidated again. Now it consolidated, if we look back here, the market consolidated again back at this point. Okay, so previous highs, all-time highs. Again, the market pulls back, comes back to it, and that's that next area where you see that resistance. But what did the market do? Broke out of that on increasing volume. We like to see that, right? You want to see when we break out, you want to see the volume ramp up. And that's what you can see right here. I'm just going to show you guys. All right. That's a nice ramp up in volume as we're breaking out. Okay. And then again here, pulled on back, never quite retested this consolidation. But it did pull back a little bit. And then we saw those nice jobs numbers and saw a nice breakout again ramp up in volume, right? So this is something, the market is acting very good. We still are in that overbought territory here on the RSI. So you do have to be careful. We are at all-time highs. So anytime we are, in that area, there's always room to pull back. And that's fine. Pullbacks are normal, okay? So that's the S&P 500 SPY ETF that tracks it. Going over to the QQQ, this is what I have here. So on the QQQ, this is the NASDAQ ETF. This was that area here where we were hitting the all-time highs back in at the end of 2021. Again, this is where we saw a lot of consolidation and then the market breaking out on a ramp up in volume. Okay, you can see that there. What I did see on this yearly chart here, right? So this year, 2022, you can see this bull flag. It's a long stretched out bull flag, but it acted very good as far as the technical analysis went. And then right here, we saw that breakout. Okay, so that's what we're seeing on the QQQ. Now, the NASDAQ market, which is the NASDAQ composite, has not yet reached its all-time high, which is up here. Okay, so as the S&P 500, SPX here, looking at the S&P 500 index, that is in an all-time high, but the NASDAQ market has yet to hit that area. Okay, saw some nice pullbacks here when it did get to that area. Maybe the market is looking to try to get back there, but that's the NASDAQ market right there. Something really, really crazy. If you want to see an insane chart, take a look at Meta. After earnings, I mean, take a look at this RSI right now. 86.48. The last time we saw that with Meta was back here after this sell-off, a huge gap up in earnings. Okay, we saw the same thing, a massive gap up in earnings. The only problem is there's no orders that have taken place here. So if we look at this with the volume set, you guys can see here that what this does is this creates a big vacuum here where there's been no volume taking place. Okay, odds are eventually at some point the market will pull on back and look for that support at some point. All right, RSI's through the roof. I mean, they did have an amazing quarter. Meta has been one of these stocks that I have been all about, especially when it pulled all the way back here. We were just looking at the PE and the price to earnings. That is, it was just not making any sense. It was so killed and oversold here. You can see this level. That was a great time to get into it. Now, you can never tell what the bottom is going to be, but what you can tell is if a stock is selling at a very low PE and, for whatever reason, the market doesn't like it at the time, you can always get involved in these. Even if you got involved back here, it goes down more, you buy a little bit more, you average your position out, you're going to be rewarded if you buy quality companies, and that is a quality company in Meta. All right, so that's it. Quick weekly watch list video. Hope you guys enjoyed. Hit the thumbs up. I'll see you on the next one. Take care.